Kyle, I think, how old are you, Kyle? 14. He's already taller than me, so it's sad. So we'd like to go ahead and keep things going here. We're going to start the evening, as we have differently already, with a short video to tell you a little bit more about Don's story, and then Don will take over from there. So again, welcome everyone, and thank you for being here.
I started DLP 13 years ago as a small real estate team in Lehigh Valley, Pennsylvania. And we've grown to a family of 7 companies with multiple offices and over 300 team members that provide innovative real estate solutions for over 20,000 families and counting. I started DLP by making 100+ phone calls every day and meeting with 4 to 6 homeowners daily. I worked endless hours with immense passion to build something different, a business that solved problems, not just sold houses. How I spent each day has changed a lot over the last 13 years, but what has not changed is my passion to provide innovative solutions for the DLP family. Though I continue working hard for our investors, I'm committed to living fully, one of our core values here at DLP, by making time for my family, my wife, raising our 2 boys, and focusing on my faith and our church community. I've always been an entrepreneur. As a kid, I used to sell Hostess donuts for a quarter each that my parents packed for me at lunch. At 100% profit and 100% cash-on-cash return, the business was a runaway success. But whether it was mowing lawns or any of the other businesses I've started, I've always tried to create solutions to everyday problems for the families in my life. That passion is what has led me into the world of real estate. In the midst of the Great Recession, just helping people buy and sell homes wasn't enough. We began to offer the Guaranteed Sale Program. Your home sold in 68 days, guaranteed, or we'll buy it. We also offered the Immediate Buyout Program. We created these programs to provide solutions to home sellers. And in turn, we became real estate investors and started renovating homes and turning back great homes for home buyers. In order to do so, we started DLP Builders to handle the renovation of these homes. Some of the homes we decided to rent and started building a rental portfolio and launched DLP Property Management to handle leasing and property management. We launched DLP Capital Partners to create a passive real estate investment option with consistent returns for our investors and to fund our investment strategy. As we raised more capital, we launched Direct Lending Partners to provide experienced borrowers with fast and flexible capital. I've always felt that every problem has an answer, and at DLP we have always created innovative solutions for those problems. DLP's purpose is to create prosperity through innovative real estate solutions. We will achieve our purpose through our focus on attracting, hiring, and developing great people, and our relentless focus on execution for our clients every day. DLP's investment strategy is quite simple. Provide exceptionally consistent returns without losing a penny of our investors' principal. We are extremely proud that we have over 500 investors who invest alongside myself and DLP into our investment funds. We're proud of the fact that we have 0 losses to any of our investors, and we've generated and exceeded our returns in all of our investment funds. We believe we are a truly elite company here at DLP. We have been able to consistently grow year over year, ranking as one of the Inc. 5000 fastest growing companies 6 straight years and achieving over 2,000% growth over that period of time. But we are just getting started. So now before we get started with tonight's presentation and dinner, I'd like to go ahead and ask all of our existing investors to please stand up. So existing investors, please stand up. And these are all of our, many of our investors here tonight. Round of applause for all of them. Awesome. You guys can go ahead and sit down. And then DLP team members, please go ahead and stand up. A round of applause, please, for them. Make sure you get a chance to chat with them tonight, hear their story, what they do here, and how they make what we do happen every day. So all right, so everybody, go ahead and continue eating here. We're going to go ahead and get started into the presentation. We're going to start off with a raffle, or we're going to end with a raffle, I should say. So every table has a couple entry forms. There's one for prospective investors and one for existing investors. The existing investors, I believe, is white, and the prospective investors is blue. Please answer these questions. Hint, I'm going to give you these answers as we go through, so follow along. And then we'll be giving away some vacations to beautiful St. Simon's Island, Georgia, at the end of the presentation. So please fill those out, and we'll come around and collect them later and do a live raffle and give away some live vacations. All right, so you heard a little bit about how we got to where we are today. I'm going to tell you a little bit about what we do, how how you can participate in what we do, and then we'll open up to questions as well and answer all the questions you might have here tonight. So start off with, we're talking about investing, of course, and there's two keys to my belief in any investment. Whether that's a public company, a private investment fund, real estate, it's a good strategy and great execution. And we run two investment strategies here at DLP. The first is we do direct real estate lending. The second is we acquire, manage, and add value to apartment communities. And I'm going to explain each of these two strategies tonight in that order. DLP, as the manager, which I mentioned, the key is great execution. DLP Real Estate Capital, which is the parent entity here at DLP, is a vertically integrated organization, which you hear about tonight. We have 350 team members now, and we operate on a system we call the DLP Elite Execution System. It's how we drive results every day in the organization. So if you're thinking that sounds great, but why should I be interested? I'm going to start off and giving you a little bit of insight to why I think if you're new to us here tonight, you might be interested in what we have to talk about tonight. So first is we provide fixed return investment vehicles, which provide 6 to 9% fixed returns with monthly distributions. Second is you can invest in any of three different funds I'm going to explain tonight and earn 11% plus annual net returns on your investment. Maybe even more importantly, why you might be interested in what we have to do is if any of these situations apply to you. You have a family and you want to be able to provide security to your family now and in the future. You're in retirement and want consistent, stable income. You're planning for retirement and you want to build up your nest egg with consistent growth of your 401k, IRA, investment vehicles. You have concerns with the economy, concerns with the stock market, and you want your investment protected that's going to do well through market corrections. Or maybe lastly, you just want to have a good night's sleep. Who here, I want to get some participation here, so who here likes to lose money? So hopefully then this will apply to everybody then in the room as we had no hands go up. Our investment principles or rules, even though I just told you how great our returns are, that's not the center of our focus. Our number one principle here at DLP is no losses to investors ever. Number two is consistency in the returns we generate. And then third is generate the highest return we can without forgetting rules 1 or 2. What we actually do with the money that people invest with us is we invest in people and in real estate. And when we say we invest in people, we're talking about all of you, all of the investors in the room. It's our money that we're investing into people and into real estate. And in turn, I mentioned a little bit of this in the video, we provide housing right now to over 20,000 people live in our properties right now, live in safe communities that we own. We support and help more than 200 entrepreneurs right now grow their businesses, support their local markets, create jobs, and drive the local economy. We provide jobs to over 300 team members and support their families. And then in turn, we generate consistent, reliable, high-yield returns to our investors. This shows you a little bit of what we do in pictures here. Some of the happy people we help, some of our team members, some of the homes we own and renovate and build and manage. So a quick bit about us. DLP Real Estate Capital is the parent entity previously known as Dream, Live, Prosper, which is what DLP stands for. And we have a family of businesses, the newest being Bright Homes, which is the newest company that we actually just acquired on July 1st. DLP Realty is the most well-known company here in the Valley. We've been here for 13 years selling real estate. DLP Capital Partners offers these investment products you're here hearing about tonight. Direct Lending Partners makes loans to real estate investors. DLP offers an easier way to sell your home, the immediate buyout program. And real estate management is property management, construction management, asset management. Bright Homes, a new home builder that we just acquired out of Orlando, Florida. And Alliance Property Transfer is our title company. These are the leaders who make things happen here at DLP. DLP executives, I'm going to make you stand up once again. DLP executives, please stand up. So most of the executives, many of them are here with us tonight. These are the people who make things happen. So you see, what do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 of our executives here in the room with us tonight. Really do an amazing job. A gentleman asked me earlier tonight, how we've been able to grow so much, how I can manage all this growth, and it's on the screen right there. They're leading the results of 300 team members across our organizations. Go ahead, you guys can sit down. And tell you a little bit from our team members here. I'm going to attempt to play another quick video. And I don't know who's controlling in the back, but are you guys able to hit? Yep, they are. All right, good.
Why I love working at DLP is the philosophy of right person, right seat. I think here you're able to find a niche that you really excel at and can help DLP grow.
All the positive energy.
The growth.
The flexibility in the work schedule.
I love the team members and I love the hard work everyone puts in here at DLP.
I love working at DLP Realty because Don provides an amazing working environment and a clear vision on where the company is today and where it will be headed.
What's not to love? Never ever have I worked at a place like DLP Realty. It's a place where we always put people first. It's a place where we have programs to fit everybody's needs that come up with real estate. It's a place where we are driven by our core values in our Driven to Greatness program. DLP provides us with the tools and equips us with trainings to provide great success in all that we do.
Let's see if I can control it here. There we go. Oops.
At DLP.
There we go. So a quick bit about myself. Most of you here have had the pleasure of getting a chance to meet and hopefully know a little bit about myself. I heard a little bit about in that video a couple minutes ago. I founded the company a little over 13 years ago now. Since then, I've closed more than 11,000 real estate transactions, over $1.5 billion, including the acquisition of more than 11,000 homes and apartments, including over 4,000 just in the past year. We've been ranked, just a couple weeks ago, we were ranked the number 11 real estate team in America. 5th year in a row, we've been one of the top 15. And I founded each of the DLP companies over the past 13 years, and a little bit of the format and story you heard a couple minutes ago. And then I'm the father to 2 little boys, Donnie and Alex. Donnie, who is the one in the picture with the hats on the left, and Alex on the right, who are 7 and 6. And my wonderful wife, Carla, who is somewhere over here. There she is. Yeah, round of applause for her, please. So I already told this story a little bit in the video, and I told this story a year or so ago at Investment Dinner, so I'm not going to go through the whole story again, but my staff gave me a nice surprise here and gave you guys all Hostess donuts here on your table so you could partake in the story. But as you heard in the video, my entrepreneurial spirit started selling these donuts to my kindergarten classmates for a quarter a piece. And it really did. I mean, at the time, of course, didn't realize it, but that really was the start of my entrepreneurial spirit that carried all through my childhood. The story of the Host Donuts, actually, my father told at my wedding and reminded me of this story. So make sure you use this as an excuse to eat a donut and have one there tonight. Since then, I've focused on building companies, growing companies with our great people here that solve problems. I believe that's what all great companies do. We're driven by the purpose of passionately creating prosperity through real estate. We have 8 core values you heard a couple of our team members mention in that last video that really drive our decisioning, drive the type of people we hire, the type of people we like to go into business with, and how we make decisions every day. That's led us to this performance track record here, and why, really I can do what we're doing tonight, which is go to almost any investment product out there and find a place where they take all their existing investors, the people who actually have their money invested with them, and put them in the same room next to you, who can tell you all the good, the bad, and otherwise here. And we're able to do that because of what's on the screen right here. We have 0 months of missed returns to any investors, never missed a return target. We have 0 principal losses, and we've generated double-digit returns in all of our investment funds to all of our investors since our founding. Big part of why we've been able to do that is through the consistency in the way we've grown. In the video I said 6 years ago, last week we were named the Inc. 5000 fastest growing company list for the 7th straight year. We've grown by 70% a year every year for 13 years. Incredibly consistent, hence why the returns have been able to be incredibly consistent. This is a snapshot of DLP today. Last year we sold about 1,250, had 1,250 transactions, homes sold. This year we've already surpassed that number in the first half of the year. We now have, in the video I said 500, we now have over 700 investors. We have over 400 loans out to investors. We own now, I believe after today, over 10,000 apartments and homes, over $700 million in assets, provide housing to 20,000 people, as we said earlier, support 200 entrepreneurs, and have 350 team members here across the DLP companies. But we're not done growing. We're still growing. That's why we're still here. We're still bringing in more capital. Last capital we brought in, our record ever, we brought in $30 million, $29.9 million of new investor capital. We're still growing. We're going to grow to $1 billion plus in capital, $1 billion in real estate we own, and $1 billion in loans to real estate investors. These two gentlemen who are here in the room with us tonight, Bob Peterson, Barry DeGroot, Chief Financial Officer and Chief Legal Officer, are also partners here at DLP Capital Partners. Really critical team members who drive results every day, protecting you, protecting me, protecting all of our team members. These are the leaders here at DLP Capital Partners who run all of our investment funds, who generate amazing service and support to all of you every day. Growing team, just welcoming Lisa and Julia are here in the room with us tonight, to the team here this past month, which is really timely considering Mandy happens to be on vacation, who normally is running point for these events. And then Rich Delgado, we welcomed at our last dinner, is our new managing director, bringing immense value, resources, and growth here to DLP. And of course, everybody here knows Larry and Bob Shimanak, who really lead providing you guys amazing service every day. And then we have Liz and Mandy, who are really the anchor behind what we do. And then most importantly, we have the team who actually make sure you get paid. So we have Monica and Dan and Joanna, who provide all the great reporting, distributions, accounting to you guys on time each and every month. So I'm going to play another quick little video here from Larry, telling you a little bit more about his role and how we think about providing you guys service here at DLP.
My job is to make sure that our investors, both new and current, have the best experience possible, and I find new and better ways of doing things all the time. My proudest moment so far at DLP is really just being able to see when somebody says, I wouldn't have been able to do the things I'm doing without Don and without DLP. So it's something that really makes me proud to say that I had a part in helping these folks achieve their dreams. Being solution focused is not waiting for somebody else to take on that responsibility. And as long as we keep the clients in mind, then certainly it always comes back to them. So we have a lot going on here, and it's always very, very busy and a bustling place, but the best thing about it is that there's such a clear purpose to what we're doing. I love coming to work every day, especially with all the great folks we work with.
All right, so this is where we're located. We have a headquarters down the street here in Hanover Township on 95 Highland. It now is gray if you go by it shortly. We just painted it here these past couple weeks. Looks awesome. We have a southeast headquarters in St. Augustine in St. Augustine, Florida. And we have a few satellite offices throughout Florida, down in Daytona Beach, up in the Poconos. And our newest location is in Asheville, North Carolina, where we held our first ever investment event 2 weeks ago, had an amazing turnout. And we'll be hosting another event for a lot of our close investors in a couple months, which I can't wait for. We now have over 700 investors, as I said. Started this year, we had around 500. So really amazing growth. This is where we do business. So we're located mainly in Pennsylvania and Florida, but we do business really up and down. All those states that are green are states that we can do business in. And then all the ones where you see numbers, you might not be able to read them, but those are the states that we own properties, have loans outstanding in. We're very, very active in the Southeast, and then here in Pennsylvania and New Jersey as well. These little houses here are the apartment communities we own, which are again mainly throughout the Southeast, as well as here in Pennsylvania and New Jersey. And we have one up in South Bend, Indiana as well. One of the reasons to be interested in us above and beyond the returns and is the transparency. So if you have not yet logged in, we provide all investors with access to DLP Crowd. Log in, you can see all of our past financials, our audits from our independent audit firm, You can see all the historical portfolio, the assets we own, the loans we make, everything you could want to see to really have transparency in your investment, and there's no black box effect. So with all that said, I'm going to get into the two strategies here. So the first is private lending to real estate investors. We've, as we mentioned a little bit earlier, we started as operators, and we flipped hundreds and hundreds of homes over the years, over 1,000 homes. We did all the renovations, and Larry over here in the middle of the room runs our construction business, and we've done all this heavy lifting and employed tons of people and do all the construction work. We've had times where we've employed 100 people just in our construction side of our business. We had to do all the marketing, generate all the deals, do all the work to flip every house. Tremendous amount of work. And basically, at the end of the day, you do all that work, and if you do a good job, you make about $20,000 to $25,000 flipping a house. And we realized that the lenders who we were borrowing money with back when we started, they were making close to as much money as we were. They weren't doing any of the work, and they weren't taking any of the risk. So we said, we need to become a lender. And that led us down the path that not only did we know we could make good money at it and provide great returns to our investors, we also realized there was a major gap that most lenders weren't very good. They didn't provide very good service. They were hard to deal with. They just didn't seem to understand the business of flipping homes. So we started down the path of becoming a lender, leveraging all the knowledge, all the relationships, resources, our construction company, our management company, to be able to go out there and provide resources to borrowers, to other investors. And we became a lender in 2014. And we now have a team of about 30 team members who drive results in our lending business. And this is one of our sales leaders, Nader Hack, who just had a baby girl earlier this week. We'll let him tell you a little bit about our lending business.
My name is Nader Hack. I currently reside in Plattsburgh, New York, but I'm originally from Orlando, Florida. I'm a senior funding specialist here at Direct Lending Partners. I started working in the private lending industry a couple of years ago as a broker. I had my own brokerage shop, and as doing research for hard money and private money, I came across Direct Lending Partners. After I'd done some research on their website and looked into what they do, I was intrigued by the company and the culture and the trajectory that they were going, and I had to be a part of it. Some of the unique characteristics that I'm going to bring to my client is efficiency and speed. I've been doing mortgages for 25 years. I've funded over $500 million worth of mortgages, and at the end of the day, it's all about customer satisfaction and gratification to get them to the results that they needed to get to in an efficient manner. The favorite aspect of the job for me is just getting things done, getting real estate financed. I just have a passion for financing real estate and helping others achieve their goals.
We summed it up there. So, we deliver great, fast service, amazing. Everybody don't be alarmed, I don't think. There it goes, all right. Through this strategy of providing real estate investors, professional investors with the capital they need to go out there and invest in properties and communities, we've been able to generate over a 12.5% return every year since 2014, exceeding our target return of 11%. We pay out distributions in this strategy every month. We provide 90-day liquidity to investors. A little bit highlight on the strategy. So, great team that runs this business. Right now we have over 350 loans outstanding. Nate, our president of lending, is over here on the left side of the room, happy to tell you a lot more about this side of our business. And one of our very best borrowers is right here in the front of the room, Rocco. I'll tell you about why he works with us here in the Valley. We've done over now 1,200, I think actually we're closing on 1,500 loans. We pay out distributions every month in this strategy, and it does qualify for a 20% tax deduction called qualified business income. And Bob will remind me to tell you, consult with your accountant. So what we do here is we make short-term bridge loans to investors, 6 to 12-month loans. These are first position loans, and they're what's called good news loans, meaning people aren't coming to us because they're in desperation, they're about to lose the property. They're coming to us to buy a property, turn it around, and make a profit. So we're funding average homes, $200,000, $300,000 homes, on average $275,000 homes, and we're funding apartment communities as well. Our average interest rate on single-family homes is about 12%, but it's very short-term loans, as we just mentioned. We do not lend to this person. If you can't read it, it said, if only it would be so easy to flip this house. So there's a lot of people who watch HGTV, decide they want to flip homes, and give it a try. We fund professional investors, people who do things like this. So this is an example of one of the homes in Philadelphia that we recently funded. It looked like that at the onset. It was partially gutted when they bought it, really rough shape. They bought it for $80,000. We did a loan for $180,000. They put over $150,000 into the renovations at an end value of $305,000. We gave them a loan which worked out to be 55% loan to value, 85% loan to cost, which is on the high end of what we do. And this is what they turned it into. Did a really amazing job, sold it very, very quickly. Here's another one we did in actually New York. That's a very typical looking little house with the pink walls and the green bathrooms and wallpaper on the ceilings and so forth. So this was a $60,000 purchase price. It was a $50,000 loan. They did a $20,000 to $30,000 renovation. Had a completed value of $127,000. It was a loan at 39% loan to value, 57% loan to cost, and this is what they turned that little house into. So really professional investors. On average, our borrower has about a 700 credit score, has a $3.5 million net worth, has completed 25 real estate deals, and has $500,000 of liquidity. So, and they personally guarantee the loans as well. So successful full-time investors is who we're lending to. Another way we mitigate risk is our average loan to value is 54%. I guess it's 55% as of today. 73% average loan to cost. And loan to cost means how much we fund them compared to how much they pay for it and they put into the renovations. And when people think about lending, they think about the risk of foreclosure, right? That's the risk you think about. And in the great mortgage meltdown of 2008, there were over 10 million homes that went into foreclosure. And DLP team members and existing investors, don't answer this question. Out of those 10 million plus homes that went into foreclosure, take a guess, and just shout it out, take a guess as to what percentage of those homes people put down 20% down payment. 0? 0? 5? 10? 10? So it was well under a percent, about 0.1%. So very, very, very few put 20% of their own money down into those properties. So if you were going to lend money, and I just told you that fact, what would you think is pretty important? People put money down, right? They put skin in the game. And that's the most important thing, in my opinion, to lending is the skin in the game by the borrower. Our borrower is an average of 27% invested, and they're buying properties for less than their worth, so our average loan to value is only 55%. Another way we mitigate risk is we're not making 10-year, 20-year, 30-year mortgages. Our loans are 6 to 12-month loans, typically paying off in under 9 months. So we're not taking the long-term risk of real estate prices going down. And it creates great liquidity because over a third of our loans pay off every quarter. We have over 350 loans outstanding now, so we have a lot of diversification. We're in 80 markets across 20 states to more than 50 different borrowers. This shows you a little map. You can't read it probably that well from there, but shows you a map of all the different states that we actively have loans in right now. So we're really heavy up and down the East Coast. Another way we mitigate risk is we get third-party appraisals, inspections done on every property, third-party inspections done by construction inspection agencies. We do internal valuations. We hold back all the money to renovate the property, and we only release that money after they do the work, and we go out and inspect that they do the work. Another way we mitigate risk is that we're an operator. We've flipped over 1,200 homes. We've built over 1,000 homes. We've bought over 11,000 apartments and homes. We actively manage, renovate, construct homes. So we have the infrastructure here and the knowledge to actually handle a property if it were to go south. This is the track record to this strategy in the DLP lending fund. That light green color you can see there is 11%. So that's the target return for the fund since the fund is open. That dark green is how much we've exceeded the return target by every period. Our return since we opened is 14.1% annualized. This is the structure of the fund. Our target of the fund has been 11%, 10% preferred return, which means you earn 10% before we earn anything. We don't even get our management fee until you get your 10% preferred return. If you went out and talked to 100 different private investment funds, I'd be shocked if one other one, the manager didn't get their management fee before you got your preferred return. Great liquidity. If you come into this fund from day one, you can redeem your investment out in 90 days or less. We pay distributions every month. We actually pay 2 distributions a month. We pay you the 10% preferred return on the first of each month or by the first of each month. And then we pay everything we earn over that by about the 15th of each month. Everything we earn above 10%, everything over the preferred return. So great strategy. And we also have the DLP Income and Growth Fund, which is very, very similar. They both make short-term loans against real estate. The other way you can invest in this strategy is a note holder. If you've heard us on the radio as an example, this may be mainly we've heard about the fixed returns that we offer. 6 to 9% fixed returns based on how much money you invest. You can invest from $100,000 on up, and based on how long you commit. You can commit for just 90 days, 3 years, or 5 years, and you're going to get a fixed note. You can take distributions every month, or you can let it compound and grow, change at any time. It's a great investment vehicle for IRAs, 401ks, to earn great consistent returns. This chart shows what your returns are if you let it compound every month. So we compound on a monthly basis. All right, so Deb, come on up. I'm hoping you were prepped for this because I have you on screen here. So Deb is an investor. She's known of us for many, many, many years. Has referred, I think, a dozen people to us before she even became an investor, and is an investor here in our lending strategy. So I'm going to ask you a couple questions here to tell a little bit about the strategy from your perspective. Hello, hello. There you go. All right. So how's investing with DLP and our lending strategy been, and how's it impacted your life?
Okay, we've been investors for about 2.5 years. Very happy, successfully investing since January 2017. We have non-IRA and IRA investments, and the returns are fantastic. They're just, those of you that are investing, I'm sure you can share that the returns are just unbelievable. Better than the stock market, and certainly better than any kind of savings plan that we've ever had. So it's just awesome. As far as recommending people, we have, and we continue to recommend it. We think it's an excellent opportunity. It's just great for everyone. Did I answer all your questions?
I'll ask one more. So the lending strategy we just talked about, what do you like about this strategy? Why did you choose to invest into this side of our business?
We have some experience, not close to DLP, but in investment properties, and all of the strategies that Don and his team has implemented are just right on the mark. So the idea to have people's skin in the game really does make a lot of sense, and I'm sure it makes a lot of sense to all of you. It's very commonsensical, and I think that the strategies work, as you can see in the results, and it's just been fantastic. The strategy to purchase certain buildings and look at the future, and then also get rid of the properties that they don't see that will be as profitable. It's just fantastic. So again, we look at his strategies, we look at his business sense, and the teams, and the motivation, and the leadership, and we're just absolutely pleased with everything with DLP Capital. So we just had a recent fund that we added to our DLP Capital Investments portfolio, and we had the same service that we had 2.5 years ago, just excellent. So just want to name a couple people: Bob Shimanek, Liz and Barry DeRoot, Larry, Mandy, just everyone. They answer our questions right away, no pressure, and everyone just wants us to succeed so they succeed as well. So it's just great customer service, which is welcome because you don't see that too often in a company. So just excellent, and again, with Don at the helm, we're very, very confident.
Awesome. Thank you, Deb. Round of applause, please. And she led into the other investment fund, we're talking about where we buy properties and improve them. So she gave me a perfect lead-in, which is the newest investment she invested into here in just a moment. But I mentioned here utilizing your IRA, and that says, this is our retirement plan, which is putting your hat out. So it's a great place to invest retirement capital. That's a big percentage of the capital we manage here at DLP. All right, so next strategy, investing in real estate. So raise your hands if you like to pay taxes. Oh, a few. That means you're making money, I guess, right? So that's a reasonable point. So this is a strategy if you want to shelter your returns from taxes. Tax-sheltered real estate investing. What we're doing is we're buying apartment communities, primarily 200 to 500 unit apartment communities called Class B apartments, value add, which I'll explain what that means. What kind of apartments we do not own? It says 2-bedroom apartment, $2,000 a month, need to use oven for heat. So we don't invest in very expensive apartments in general. In all of our properties, we really focus on providing great places to live, really functional properties with all appliances and heat working, and air conditioning this time of year. So we did a cool little quick video that kind of explains how we go about buying properties, finding the deals, because it's a question we always get at these dinners, how this actually happens, how we find deals in this really difficult market. So I'm going to show you a little video here of how we make this happen. I promise our last video. And then I'll explain a little bit more about this strategy and then wrap it up and open it to questions. In the last 12 months here at DLP, we've acquired over 4,000 apartments and homes. And if you talk to most real estate operators, you're going to hear it's so hard to find deals in today's market. It's so hard to go out there and find good deals and acquire properties at good prices, which is 100% true. Yet we've been able again to close over 4,000 apartments this past year, and the reason we've been able to do that is starts with immense, massive action. We go out and we evaluate, we underwrite 300 to 500 deals a month, and we have a big analyst team who goes through and they underwrite the deal. They go through and determine could there be a chance that this deal could work, hit our return profiles to be able to generate the kind of returns we distribute to our investors. And out of those 300 to 500 deals that we go out and look at, there's a very small number, somewhere around 30 to 40 deals that actually make it through that first level of screening. So about 10%, that then we take a very deep dive and we go through all the past financials from the seller, go through every single lease. We go out and we pull crime reports, we talk to the seller, we go out and we walk the property, we go out and look at the actual apartments, we go out and talk to the managers of the competing properties, we go out and walk the competition. We go and talk to the residents. We go down to the police station. We go and pull the permit records and understand the history on the property. We pull any insurance losses history on the property. We do an immense amount of work, but only about 20% of the deals that we put offers out on actually get accepted. So we went from 500 deals that we looked at in a month down to 2 or 3 deals that actually get accepted. And then out of those 2 or 3 deals, we go back out to the properties and we rewalk every single apartment. We go out and back and rewalk the competition further. We bring our contractors out. We take an immense level of hundreds of hours of additional time, effort, and money. We bring 3, 4, 5 DLP team members out to that visit from the investment team. We bring multiple team members out from the property management team, from our construction management team, from asset management, in addition to our contractors and vendors. And out of those deals, about half of them then get through that inspection period and get to the point that we agree to buy the property after our inspection period and actually close on the property. So yes, we've bought 4,000 properties in the past year, but it's only 1 or 2 properties a month that we end up buying. But we know that we have to put forward tens of thousands of man hours, money, effort to get to those 1 or 2 great deals. So it's an amazing process driven by really incredible people. Allows us to not only find great deals, not only generate great returns, but mitigate risk and make sure we're investing in properties that we believe in and we believe we can bring tremendous value to the community, to the residents, and to the greater neighborhoods. So that tells you a little bit about what we do. You saw a little bit of it in the field. I'm just going to hit a couple bits about it and then show you some of the properties that we own right now in this fund. So right now in the market, if you at all are out there investing directly or with other investment funds, you'll see people are buying properties at 4 and 5 cap rates, all-time high prices. And it's really, really competitive out there. Where $36 billion is being invested into Class B multifamily in 2019. By more than all other real estate asset classes put together. That's how much money is chasing these types of deals right now, for good reason, because it's a great place to be as you get ready for a recessionary environment. So we spend tremendous time to source great deals. We use very conservative underwriting to make sure the deal still can hit the kind of returns we target to our investors. We're typically buying deals over an 8.5 cap rate after we come in there and add value. We put in long-term non-recourse financing, takes out the risk and interest rates going up and our financing being called, et cetera. This shows kind of that funnel we talk about in the video. We're looking at 300 to 500 deals. Again, 300 to 500 deals, those of you in the contest. Or in the raffle. And we get down to only buying 1 or 2 of those every month. We come in there and add tremendous value. We're doing real renovations, replacing roofs, parking lots, renovating all the apartments. I mean, real big amounts of work. Then driving management, replacing bad tenants, removing drugs and crime out of neighborhoods, really doing a lot of work to make these great, safe places to live and great investments. These are some of the highlights of some of the communities we own, but I'll show you some of the specific ones here. This is the map again of what we own. These are the leaders who drive results on our management company. Jason and Larry are both here in the room with us here tonight. It says here, how do we evaluate properties? He said Mr. Starkey was the first to find the structural defect. He fell through the floor. So I'll show you some pictures first, but quickly, you probably aren't surprised to hear this. Rentership is on the rise, right? Probably been hearing that a long time. Past 10 years, we've gone from close to 70% of people being homeowners to now about 60%. Most people think that's going to change. That's millions of homes. 20+ million people went from being owners to renters in the past decade. People are getting married later in life, having kids later in life, and then people who are older in life don't want to own homes anymore either. So rentership is on the rise. As you probably know, people like to move to warm weather, both at earlier points in life now, but also at retirement. A lot of people moving south. Great job growth in the south, specifically the southeast. Great weather, so great population growth, which great demand for apartments is what all that means. We focus on smaller markets so we can get diversification. There's less competition. We can get better deals. We focus on Class B, which are affordable apartments, not your brand new properties, typically built before the early 2000s. So in the past 10 years, past decade, since the last great recession here, take a guess, and DLP investors don't give this answer if you know it, take a guess in the past decade, how much rent has gone up in America on average? 20%? 50? 60? 7? 90? 100? 25? So we got a lot of guesses around the board. Most of you aren't surprised guessing that's gone up quite a bit, right? It's gone up 55%. So that means if an apartment was $800 in 2008 or 2009, now it's $1,250. Who thinks incomes went up 55% in the last decade, right? So incomes for the majority of Americans, the bottom 70% of wage earners, take a guess how much incomes went up over that same period of time. 3%? 5%? It's a good guess, about 5%. So cost of living went up 55%, income went up 5%. Anybody see a problem with that formula? And then everything that's been built in the last decade has been luxury, meaning the rents are over $1,500. So that creates this tremendous demand for affordable places to live. Our average rent in our portfolio today is under $800 a month. So how you invest in this strategy is called the DLP Preferred Return Equity Fund. This is a 5 to 7 year fund. We're closing in on our first year of this fund. It's designed to produce 8% returns net to investors through cash flow from rental income, paid out quarterly, so 2% a quarter, most of which, if not all of which, will be deferred from tax. And then when we wind down the fund, we expect to return a total return of over 12% net to investors. Again, very tax efficient. Our preferred return in this fund is 7%, which again means you earn 7% before we earn anything. We don't even earn our management fee until the point that you earn 7%. So to talk a little bit about this strategy, we have Dave. Where's Dave located? Over here somewhere. Hopefully you were alerted to this. I've seen 2 surprise faces tonight. Maybe we just like to put people on the spot because they say the nicest things when we do that. All right, so Dave's been invested with us for a lot of years across many funds. Dave, start off and tell us your background first.
First of all, I was a McDonald's operator here in Bethlehem for many years and currently retired about 5 years ago. And I guess I kind of got tired of listening to Don's WAEB advertising all the time and walking by his office every day over on 7th and Broad, and I finally said, hey, I got to stop in and see what's going on. And first person I sat down with was Barry DeGroot, I guess the lawyer for the organization, and got in touch with Don and kind of went from there. Put some money in my wife's name and started to take a distribution, and that was in November of 2015. So I liked it enough that I added some more money in my name and kind of proceeded from there and thought it was great for maybe for my grandkids and was able to invest in the note offerings, which has kind of worked out for maybe the last 2.5 years. And finally got involved, I think it was December of 17, in the preferred Gulf Coast property enterprise.
Yep, 1,000 units that we bought back then. We still own today.
Yeah, so that's kind of where I've been, and I've liked DLP as the last, I think her name was Debbie, was alluding to. Everything's usually in the stock market up and down, and this is always kind of like guaranteed 10% return monthly, EDC on a quarterly basis in the growth and income fund. So, you have the option to take a distribution or compound it. Some option of either take some, leave it all in, or whatever works best for you. And everything's been great. There's been no snags, no miscues as far as the last 4.5 years for me. And from all I've heard from other investors, everything's been great. So, I couldn't be happier, my wife and I. And I think at least you really need to look at the overall DLP program, because it's been great for many investors here, myself included. And I think you got a great leader here in Don and the rest of the team. So anyway, I would highly endorse it.
Awesome. Round of applause to Dave. Thank you. I wish you didn't have to say that about Barry, because now he's going to want all the credit.
Okay.
I didn't know Barry had the sales skills, so awesome. Thank you, Dave. All right, so one thing I want to highlight, and I promise we don't have, at least not to my knowledge, we don't have any paperwork here with us. We're not looking to take any checks here tonight, but there is a little bit of urgency that if I don't tell you this tonight, and you forget about this dinner for a couple weeks, and you reach out to me in 2 weeks, and I didn't tell you, you're going to be mad at me. So if you're interested in investing in this strategy, the Preferred Return Equity Fund, which buys apartment communities, owns about 2,500 apartments right now, which I'll show you in a second. On July 31st, we're going to be finishing our valuation of the portfolio, meaning figuring out how much the value has increased over the past year. And the price to invest, the price per unit, the value per unit is going to go up. It's probably going to go up about 7%. So if you invest now, you're going to get in a 7% lower price. Right now, it's $1,000 we call a unit. It'll probably be about $1,070 a unit after July 31st. The first time we've increased the value is about a year into the fund. So I highly encourage you, if you're interested, talk to us now. And if you get comfortable enough and you make your commitment before the 31st, you'll get in at the lower base. It's still going to be a great investment on August 1st, but there's a little bit of an extra reason to do so now. So these are the properties we own in this fund specifically. This property here is 739 apartments in South Bend, Indiana, where Notre Dame is located. Great property. We bought for $41.5 million December of last year. This property here called Prosper Azalea City is in Valdosta, Georgia, 300 apartments. This was the first property we bought in this fund, July of last year. Really awesome property. I'd say this property is really a prototype, the type of property we like to buy. We bought a portfolio of properties in Baton Rouge, Louisiana, 4 communities in one purchase. So this is one of them, 195 units, called Belmont Victoria. We have Belmont Victoria 2. We have Park East and Park East 2, 4 communities, 689 apartments in Baton Rouge. In May of this year, we bought this community here called Country Club Apartments in Shreveport, Louisiana, 248 apartments. And then today, we bought this property, which is 450 units in Little Rock, Arkansas. Another really prototypical type of property is what we go after. And these are some pictures of that property right now, as of the day we're buying it, and some of the stats to the property. And then coming up, we're under contract to buy, actually, it's a unique situation, but we're buying a brand new ground-up construction property in Tulsa, Oklahoma. And then we're buying another 150-ish unit property nearby the property we bought today called Holcomb Heights in Little Rock, Arkansas. And here's a little bit of information on the ground-up one that we're about to buy, and the other one that's under contract called Holcomb Heights in Little Rock, Arkansas. So I know what you're thinking after all that information. Wow, how do I get started? So Next step, you can reach out certainly to myself and Rich, but really the best people to dive deeper here are Larry Hickernell, Bob Shimanek, who are both, of course, here in the room. And then you can also go to dlpcrowd.com, learn more about the investments in your own time, go through, look at our financials, our audits, past experience, past reports, see some presentations on each fund, et cetera. All right, and then lastly here, before questions, upcoming events. So July 31st, we're going to do our first ever event in Atlanta, Georgia, at Dunwoody Country Club. So come out and join us there. It was really cool in our Asheville event. We had 12 investors come from Florida or Pennsylvania last week or 2 weeks ago, and they invited about 20 guests with them. So we filled a room with friendly faces to a place we had never been before. And then August 15th will be our next event in St. Augustine. I know a number of you already said you're coming down for that here from Pennsylvania, which is awesome. That's right down the street from our headquarters there. We do our happy hour at our headquarters. And it's missing on here, but if you happen to be in South Florida, we'll be doing an event on August 13th in Boca Raton as well. And then October 11th to 13th, we're doing what we call an inner circle event. We invite out our closest investors to come out and spend a weekend with us and have a really cool, fun time. This will be the third time we've done this, first time in Asheville, North Carolina. So if you're an existing investor and you're interested in learning more about this, or a prospective investor, reach out to Larry or Bob. We'll tell you about how you can become part of the inner circle. And you can always go to dlpcapitalevent.com. Carla, you can always go to dlpcapitalevent.com. My wife was taking a picture, so she knows my travel schedule a moment ago of all of our events coming up. All right. So we're going to go ahead and do the raffle. But I think first we got to collect the raffle before we give the answers, right? All right. Looks like that's been done. All right. So we're going to gather those up. We're going to do the raffle, and then are we doing raffle first and then questions? Is that the plan?
Which half are you taking? Which half?
I believe that's the plan. So I think they're coming around right now with your raffle tickets. All right. So how many investors do we currently have? 700 plus, more than 700 now. How much did Don sell each of the Hostess donuts for? Quarter. You guys are good. That's a good question. My staff could tell you. They just bought many of them. They said they took out the stock in Lehigh Valley. So if you really want some donuts, they make sure you take some with you because you won't find them anywhere, I'm told. So how many years in a row has DLP been named one of the Inc. 5000 fast-growing companies? Wow. How many multifamily acquisition deals do we review every single month? Man, they are good. How many of our investors have lost money with us? There we go. That's my favorite answer. All right, so now we'll do the raffles. Who's bringing them up here? Oh, they're finishing them up back here. All right, so I'm going to give them a minute to do that, and we'll start tackling questions in the meantime. Brian is over here with the mic, and Bob, Drew has a mic as well. So depending on which side of the room you are, one of them will come see you to answer your questions. So just raise your hand or stand up, and they'll come over and grab you. In Asheville, we had 60 investors, and we had about 600 questions. So there's no way you guys aren't going to have a lot.
Don, are you looking at any acquisitions in the Lehigh Valley for multifamily units?
The short answer is yes. It's very hard here in the Valley. There's not a lot of garden-style Class B apartments here in the Valley, not of any substantial size. There's a lot of like 10-unit and 20-unit, 30-unit type properties. There's not a lot of larger ones. We are getting close to finishing a deal actually to build 200 brand new apartments in Wind Gap, which we're really excited about. Big need there in the Slate Belt for really nice apartments. Big undersupply there. We've gotten close a few times recently, but there's just not a lot of supply. So we would absolutely love to do so. We have so much, property management infrastructure here, but we're struggling to find them here locally. Great question.
Hey, Don. Question for you, two-part question. One, in your crystal ball with your staff, when do you anticipate the downturn in the market to occur? Stock market, not necessarily the housing market, but the stock market. The second question, are you accumulating cash in anticipation of the downturn to buy apartment units at a discount?
Yeah, great question. So part one of his question was, when do we expect the market downturn? And then he specified the stock market, but kind of answer both. So we've all heard, right? If you didn't know this yet, as of a month or two ago, this became the longest bull market in history. Right? So the markets, yeah, I mean, it's amazing. Market's been going up for 10 years straight. Pretty astounding. So right, it has to turn. It's not when. It's not if. It's when. We're going to have a recessionary environment. And I won't say. I'm not going to sit here and tell you, hey, it's only going to be the stock market. The real estate always has some disruption when the stock market has disruption. Mainly because fear sets in, and that stops people from making decisions and so forth. So people have been saying we're in the proverbial ninth inning for I think 4 years now, 5 years from now. So nobody knows for sure. I was predicting, hey, the market's going to slow down this year steadily, and we're going to go from last year seeing 4% rise in home values and breaking records for home sales this year, and it would finally start slowing down, and homes would take longer to sell. Prices would be flat in some markets to only a 1 or 2% growth. Yet, so last quarter we had prices go up 4.2% again, and less inventory, and homes sold faster than they've sold in years. So market is really incredible, and it's mainly driven by a lack of supply right now in terms of the real estate market. And but who knows? It could be the political any potential political fear coming next year that could cause could cause change. But at some point it'll happen. I think it's likely that we'll have some level of disruption in 2020. But even though your question wasn't about real estate specific, I will mention something that I think is really important that most people I don't think realize, which is that in the last downturn, we had the greatest oversupply of housing we've ever had. Millions more housing units available in America than there were people to occupy them. Today, we have the greatest undersupply of housing that we've ever had. So it's very, very different, especially on anything that's affordable. So I don't think we'll have the same type of challenges we had in the last cycle, but there'll be some level of disruption, mainly driven by financial markets tightening up. So to answer your question about are we preparing and generating more cash, absolutely. So in our real estate portfolio, which is somewhere close to 10,000 apartments and homes, my ownership is over 40%. And so myself personally, we're selling some of our properties. We're selling a lot of our smaller properties right now. And a lot of that money is coming out. Some of it we're doing 1031 exchanges into new properties, but some of the money I'm actually taking and I'm moving into our own lending strategy. Because to me, our lending strategy is effectively nearly as good as cash in terms of liquidity. So I'm building up my cash into our lending strategy, which gives me liquidity then to move money into the equity side into great deals when the opportunities are there. And we're doing the same with you guys in that the majority of our growth over the past year or two has been in the lending side of our business. That's where we're bringing in tremendous, probably 80% of the capital coming into us every month is coming into the lending side of our business. And so we're building those funds up pretty dramatically. And if there's not as many lending opportunities, which I certainly think there will be, there's going to be a lot of distressed opportunities that we'll be able to go and jump and move to the equity side. And our hope, and this is the question people always say to us that from a skeptical standpoint, is all right, when the market crashes, investors tend to want to pull their money out everywhere and stick it under their mattress. That tends to be what people do, right? Fear sets in. And my belief, and you guys are going to prove me right, hopefully, is that when we have a major correction in the market, you guys are going to take more of your capital out of the stock market and other places and give more of it to us, not less. So I think we'll have a lot of capital to invest. So that's our intent, and that's why it's one of the main reasons we spend so much time educating and talking about what's going on and doing these events to build your confidence that, hey, when there's a recessionary environment, we're going to be here, we're prepared for it, we know it's coming, and we're going to capitalize and make a lot of money on it in that time. Recessionary environments only last about 15% of the time. You're in a recessionary environment, but that's where 70 to 80% of the world's wealth is made. So we want to be a part of that. So great question.
Well, first, I'd like to thank you for another nice meal.
You're welcome.
My question, My question is, you don't seem to be investing at all in South Carolina. Is there a reason for that?
We are, and even though the acquisitions I just showed you aren't in South Carolina, our core 4 states we want to be focused on from a practical standpoint. We'd love to do more properties here in Pennsylvania, but the core of our focus is Florida, Georgia, South Carolina, North Carolina. We love the Carolinas So we own 4 apartment communities in South Carolina right now: Florence, South Carolina, 2 in Spartansburg, South Carolina, and 1 in Columbia, South Carolina. So we own 900 apartments in South Carolina. Yeah, so we'd love to own more. I mean, North Carolina and South Carolina right now are the markets we're most focused on. So love to do more business there. They're pro-business states, tons of population growth. We love those states. Great question. Anybody else? While we wait till let's bring the raffles up then, whoever has those.
How often are you audited by outside third parties?
Annually. Where was that question? Oh. Yeah, but each year.
So what books are you and your team reading now?
Yeah, that's a great question. So we have a group at DLP called Driven for Greatness. We meet at 8 a.m. in the morning every other Thursday, and we read a book a month together. But I read 3 or 4 books every week, and a lot of our executives read a ton. I think it's just an amazing way to learn and grow. So what are we reading right now? So literally the book we're reading as a company right now is called The 5 a.m. Club, and it's all about maximizing your morning routine. There's lots of great books about that. This is the best one for sure. I've had so many team members reach out to me last month telling me how this book has already changed their life and how impactful it's been, how incredible it's been. My wife can tell you I've been up extra early here for the last couple months since I read the book. It's been really incredible. So really recommend it. It's by Robin Sharma. We're about to start a book called Bluefish, The Art of Getting Things Done. Really awesome book. You ever heard of the company called Bluefish? Really cool story about really not having excuses and getting things done. We just reread one of our favorite books called The Founder's Mentality. Really awesome book. Really big thing we try to focus on our organization of getting everybody to have an owner's mentality and to be obsessed with the frontline experience. So those are some of the ones that we've read most recently. I could give you a whole lot more if you're interested in specific types of books. But those are the most recent ones we've read as an organization. So thank you. Oh, sorry, over here first, then I'll go away. I couldn't say.
Thank you so much for this invitation.
You're welcome.
What
Thanks for coming.
is the lowest amount of money you can start with investing?
Generally, it's $100,000 is the short answer. And one thing I also didn't mention that I should mention to that point, so the investment funds themselves, you have to be an accredited investor, which means that you have $1 million net worth, not including your primary home, or a $200,000 annual income, one or the other. But you can invest in our fixed notes, even if you're not accredited. And soon we're going to have a fund called the Positive Returns Fund, which is going to be basically the same thing as our fixed notes, which if you're not accredited, you'll still be able to invest into.
Yeah, how much debt do you have?
So on our real estate portfolio, which is somewhere around $600 million, we're about 54 to 55% loan to value. So pretty similar to actually how we lend as well as very similar to how we borrow. And then on the lending side of our business, we're about 20% debt and about 80% equity, meaning the money that goes into the loans we make.
Thanks.
Thank you.
I appreciate your invitation to attend tonight. I'm born and raised in New Orleans, Louisiana. I ended up in the Lehigh Valley. My wife, 7 years ago, got a position as an executive director of a local nonprofit for the Lehigh Valley. I've always been an entrepreneur, and my question is would you ever think of investing in the greater New Orleans metropolitan area?
Well, that's a good question. Short answer is yes. We own properties in Baton Rouge. We own 689 apartments there. We own 250 in Shreveport, Louisiana. So, Louisiana is not our core, but we can find great opportunities there. We own close to 1,000 apartments there. New Orleans is a cool place. My wife and I have gone there twice in the last 3 or 4 years. Yeah, absolutely. And now they're going to have a pretty cool basketball team too.
Don, my question is, why do you have to be an accredited investor?
It's called the government. So the SEC is the short answer. It's a rule by the SEC that if you offer private investment vehicles out to the public, you can only take in accredited investors into those investment vehicles. Oh, the value of the share is going to go up in the preferred return equity fund? We're still finishing the valuation, so we're literally going out and valuing each property we own, and then we'll figure out the combined value of each unit. But we're estimating it's going to be about $1,070, meaning it's going to go up $70 per share or 7% per share unit.
So my brain works as like stocks.
Yeah.
So would that be the value of that? One share would be equal to
Yes.
one share of stock. So
Yes.
if I owned it already,
Your value would just went up 7%.
when I go to sell it back to you, it's now $1,070?
In effect, yes. In longer, this is a fund that's 5 to 8 year fund. It's not a liquid fund that people come in and come out of. Now, we do have an early redemption option where you can exit out with 180 days notice. So in effect, your answer is yes. But really, you go into this fund really thinking you're going to be in this fund to the end, and we ultimately sell the properties or wind down the fund. But if you needed to get out, short answer is yes.
No, but I mean at the end of the 5 years. If it
Yeah,
only
so
goes
this
up
is
to
the
one
first
time.
valuation. So, everything we really focus on is in terms of all the returns we've talked about tonight have all been realized, meaning we actually earned the money and paid the money out. So, yes, our value of the share is going up 7%, but we're not going to go to you next quarter and say, hey, everybody, you just earned 15% this quarter because you earned another 7% this quarter. Yes, the value went up 7%, but we didn't pay it to you yet. So the real value is not we don't realize it or account it or claim that we've earned it until the day that we've actually given it to you, until the day we've actually generated the income, we've sold the properties and paid it out. But in the world of thinking about a stock, or what a stockbroker would tell you is, yeah, your value went up 7%. You only get the value if you sell it, but yes. But we don't. That's not how we show our returns. All the returns we talk about are actually what we earned and paid out. Great questions. Oh, good. I'll take this one, then I'll come back.
If the NIS is doing so well in Allentown, so they say, why haven't you looked into that market?
That's a good question, and I like the second part, as they say. So we did get involved a little bit with the NIS back when it started, and we met with all the big companies and all the politicians and the developers, and their big challenge, which I'm not that intimately involved in exactly where it is today, but pay attention to it. When they started it, the whole goal, of course, was to bring new companies to Lehigh Valley, which didn't really happen all that well. It really took companies out of the suburbs into Center City, Allentown. And it was to bring people to live in Lehigh Valley. And the main struggle that Allentown has had is getting people to want to live downtown. So they came to us originally wanting us to go and create a fund that would basically be a fund that would lose money essentially, but that you'd go out there and buy these homes up from landlords, these old homes that got renovated and converted into 2 or 3 apartments, buy them back, deconvert them back to homes, sell them to people who are working downtown so they'd live and work downtown. It was kind of a live and work type mindset. So it's just so hard to do because it's not that all the homes are owned by homeowners, they're owned by different investors and they're all broken up. And to take a 3-unit property on 7th Street or 9th Street or 2 Street and deconvert it back to a home that's going to be worth $100,000 doesn't make sense, especially when all the local investors know you're doing that and they're going to drive that price. You can't just buy one, you got to kind of buy up at least a row. So it's very challenging to do, and I think that's been a big part of the reason they struggled is getting people to want to live down there. But they are building apartments, and the apartment complex, a couple that they've done have done pretty well. I've heard they're nice. But again, because they have grant money, they build these properties that actually are not good investments. Basically a 2 or a 3 cap rate is what they built to. So it's interesting, but I hope it succeeds, obviously, for the Valley. And the other thing is just understanding how investors would think about it. So if you're not that familiar with it, it's a tax incentive for 30 years. So my concern was also by 10, 15 years, people were going to start devaluing the properties because the big tax incentive for why you'd want to be there goes away. And probably there's a good chance that a lot of companies will leave because right now you get basically your payroll taxes back if you house your business down there. It's a short version. So it's, there's a lot to it, but we just couldn't make sense of it in what we focus on, which is residential. We could get the kind of returns we wanted. Yes?
Hi, Don. Question. We listen to a lot of the business podcasts, Rod, like the investor podcasts, Rod Cleef, Grant Cardone, Jake and Gino, Michael Blanc. You have a fantastic story. Have you ever been approached, or why don't we hear your story on these podcasts?
Did Kyle set you up?
No, it's actually been a question I've had since the last dinner, but I will tell you, my husband and I are active multifamily investors as well as also investing with your firm.
Awesome. Kyle is actually filming, we're in process of working with me to film our first podcast this week. Yes, so he's been after me for a couple years to do that. And then we also are writing, we talked about books, so we're writing, and actually I finish it tomorrow, writing our first book, which is called Building an Elite Organization, which is all about how to scale an organization. And last weekend, we spent the weekend teaching and training and working with top real estate operators how to scale the internal operation business, how to hire great people, how to execute, how to run meetings, how to get things done. And that's really the intent of the book, is really helping our investors grow their businesses so that we can help them grow, which we can provide them more money, and we can mitigate risk because they're running a better business, a more profitable business, et cetera. So yes, we are going to start doing a lot more quote-unquote thought leadership and podcasts and things of that nature right now. So great question.
Hi, Don. First of all, congratulations for the closing of Present Point yesterday. And we actually had
Jack is one of our analysts who was probably working 24 hours a day to help us get this deal closed and so forth. So
we actually had a big celebration in St. Augustine, Florida for the closing of that deal. I guess my question is, right now, everybody knows the market has been pretty hot. A lot of money are chasing the deals, and I've talked to a lot of brokers and investors. They were assuming the cap rate will keep going down. One of the brokers was telling me that you can buy this asset for 6.5 cap rate and you can sell for 5 cap rate in 5 years. That means we have a lot of opportunities to flip the deals in that kind of hot market. So would you like to keep the assets for 3-5 years and stabilize assets, do the value add, or you want to just flip those assets this year or next year?
Thank you, Jack. So yes, lots of investors will lead you to believe that pricing is just going to keep going higher, meaning cap rates, which is a simple term for cap rates. If you bought a property, how much cash would you generate if you bought it with no loan? So you bought a property for $1 million, a 6.5 cap rate would mean you'd get 65 grand in cash flow on that property. So you'll see lots of guys, if you went out there right now and talked to other multifamily fund managers, you'll see guys who will assume that, hey, they'll buy a property today, in 5 years they'll be able to sell it, as Jack said, at a 5 cap rate. Because pricing is just going to keep going up, and everybody's going to want to own multifamily forever. The demand is going to keep getting higher is what people think. And you'll see guys who say rents are going to keep going up like they have, 5, 6, 7% a year, and we'll never have inflation, and expenses will stay low. And I can keep my properties 100% occupied. And people make these types of assumptions to how they analyze a deal. And if I make those types of assumptions, if I tell Jack to put that in his complicated Excel sheet, it'll look like I can generate a 50% return on a terrible investment. And that's what we see a lot of guys doing, is that you can make anything look good on an Excel spreadsheet by just playing with the assumptions. And so we hear it from the brokers all the time that prices are just going to keep going up. And they've been right for 10 years or 8 years. But we don't assume that. We assume price is going to go down. We assume that rents aren't going to go up very much, et cetera. But to Jack's point, we are selling, maybe we don't know the exact number it'll end up being, but probably around 3,000 of our apartments this year. Mainly we're selling off a lot of our smaller properties that are harder to manage, that we don't think are as great of investments done long term, and where we can realize some really amazing returns by selling them shorter than we originally projected. So we are selling a number of our properties right now because people are willing to pay such crazy prices, and then putting some money into cash, and also investing in properties that we think are better positioned to generate the best cash flow over the next cycle. So thank you, Jack. Over here.
You were talking about downtown Allentown and how people have been coming in, investing, but the returns are less because of some of the incentives, and nobody knows what the future's going to hold. Over the years, being from New Orleans, I've invested in old properties, and I have someone down there, young fella like yourself. I mean, I'm an old fella, so I'm from the old school. But what he does is he is very savvy with historical federal and state tax credits. And we've done quite well with those in New Orleans. Now, have you gotten into any of those with your investments?
Very little, very little. I mean, every now and then we look at that as a kind of an additive to an investment if we can get some government money, but it's not a big part of our business model. Thank you. So I'll take 2 or 3 last questions, and then we'll do the raffle. Any last questions? Over here? Somebody? Oh, right here in the middle. White shirt. Can't see.
I'd like to know what's your dreams and the future about your company.
Say it again?
I say, me as a future investor in your great company, I would like to know you as a CEO and founder of your company, what is your dreams are?
Great question. So what are our dreams? What are our goals of the company? So we're centered around providing innovative real estate solutions. And really, we just want to do more of that is the short version. So we've provided about 21,000 real estate solutions to people over the first 13 years we've been in business. What we call our big, hairy, audacious goal is to get to 100,000 solutions. Our next checkpoint kind of on our path is to get to the billion-dollar marks that we talked about earlier over the next few years. So continue to grow and be able to offer more solutions. So we're really in the businesses we want to be in, focused around the world of housing. We want to just grow upon that, build more great relationships, build and improve more communities, grow the organization, grow our investor base, and continue to execute, each and every day. And then in turn, we have some big goals on our foundational side, on our foundation side, with being able to give back and do a lot of things we do on a for-profit business, on a nonprofit side. And we have 2 causes of our foundation, which is called the DLP Positive Returns Foundation, which are tackling the epidemic of jobs in America, which is a major problem we all hear about all the time. We're losing jobs predominantly to technology. I believe the only way to solve for that is through entrepreneurship. And then the second is the epidemic of affordable housing. So those are 2 really big causes that we want to grow the organization, be able to make big impact in for-profit and nonprofit. Thank you. Anybody else? All right, let's do the raffles then. Where did they go? Here we go. Those are big. All right, so I get to come in here. All right, so which one is this?
Current.
Current investors. So we'll have a prospective investor pick a name here. All right. So the winner is John Law. Congratulations, John. We'll come over to you. You don't have to do anything. So he wins a vacation, which I think I might have skipped that slide, but we have a beautiful oceanfront beach property in St. Simons Island, Georgia, one of our family's favorite place to go. So congrats, John. Larry will come see you then. Many of our investors have been there. It is awesome. All right, so this is for the prospective investors. So we'll have an existing investor pick this one. Do the honors.
Go ahead, Mary.
All right, unravel that for me. The winner is, that's Mimal. Pronounce that right? Mimal? Mimal Desal? Oh, over there. Hey, congrats. Congrats. Larry will come see you then. Congrats. All right, everybody. So that's everything here tonight. Thank you for all your patience, time with us here tonight. I'll be around. Larry, Bob, Rich, rest of our executive and an amazing team here. Thank you guys for your patience and for all your support.